Okay, so let's get into problem number 1 of chapter 1. We have taxpayer named Chuck, and he has $75,000 of taxable income. This is what we're going to need for part A. We're going to ignore the $10,000 for now. That's excluded income, and that will be factored in for the effective tax rate, okay? But it's not. We're not going to need it for part A, which is what we're going to look at next. So let's scroll down. And as I scroll down, I want to make a point just for parts B, C, and D, which I'm not going to cover in this video tutorial, that in your textbook, you should be able to find references for solving parts B, C, and D. We will discuss this in class, but part of your homework is going into the textbook and pulling out the references that you'll need, okay? For now, however, let's look at the federal tax schedule, which is linked to, you can link to this schedule in the homework, in the actual problem. And what we need to do is, and we looked at this past week in terms of understanding that U.S. federal tax is a progressive tax system, meaning we have different tax rates depending on income level. So income is taxed, each layer of income is taxed at a different percentage. And as the income taxes are applied with each level, what the IRS has done is they've created kind of a little shorthand table for us to compute tax in a quicker way than the way that we did it in class, okay? And this problem A, or part A, is designed to help teach the shorthand approach, okay? And this is the typical approach that we would use. So what we first need to understand for part A is what is Chuck's taxable income. Now, we know that it's $75,000, okay? So let's write that down as a starting point. And this is what I'd encourage you to be doing in your notebook if you're using kind of pencil and paper. We need to also read this table. Now, note as a starting point, this is it's a taxpayer rates for a single taxpayer. We're going to learn about different filing statuses. You can be single, you can be married, filing jointly, and so on. Chuck is single. We've been told that up above, so we're going to note that we're in this table. So the table is saying if taxable income is over, and then we're given a series of numbers in this column, okay? If it's over an amount, now Chuck is going to fall in here. His income is definitely over $40,000. But now let's move to the next column over. But not over $85,000, $163,000, $200,000, and I'm reading these numbers going down. Then the tax is, and we're given this column is giving us the actual formula that we need to use. Now a note here, the formula that we need to use depends on what we determine the rate or the bracket that Chuck is in. So I'm going to label as bracket number 1, bracket number 2. We'll call this bracket number 3, and then let's do bracket number 4. Okay, now which bracket is Chuck in? Okay, the answer here is that, and this should be fairly straightforward and by the way, pause the video if you need to, and look at the bracket that he's in. He's in this bracket right here, okay? He's got $75,000 of taxable income, and 75 is between the $40,000 and the $85,000, okay? That tells us that Chuck is in this bracket here. So we need to use this formula to compute his tax. So let's now look at computing that tax. The IRS wants us to do this. Step number 1. We're going to take $4,617.50. That's the initial amount that the IRS is telling us as sort of like the initial chunk of tax that he's going to owe. Now, let me make a point here. This $4,617, that's the tax that Chuck owes at the 10% rate and at the 12% rate, okay? So the idea is that this has already been taxed. His income up until $40,125 has already been taxed, and this is the amount that he owes on that income. But now we need to look at the amount of income that remains. And that income is going to be, the only income that we're concerned about is the income that is over $40,125, but of course only up to the amount of income that he actually earns, right? Because we don't want to tax Chuck on any income that he hasn't actually earned and is subject to owe tax on. And we know that amount is $75,000. So at this point, I want you to break out a calculator, maybe use your computer and compute this. Don't try and you can do it longhand, feel free, but also I encourage you, just make it easy on yourself and use a calculator. So 75,000 minus 40,125 gives us 875, okay? And this is the amount. This is the excess that they are referring to. The IRS is referring to. This is the excess of the amount over $40,125. So you kind of have to learn how to read this piece here. Okay, this takes a little bit of practice. Once you have it down, you know, you should be good to go, but it will take a little bit of time just to unpack that. Now, excuse me, this amount is what we want to multiply times 22%. Again, use your calculator. Times 0.22 times 22%, whatever it is that kind of helps you, kind of whatever you're used to in terms of your calculator inputs. This equals 7672.5, so $7,672.50. All right. Now what we want to do is we want to add it to this initial amount here. So $4,617.50 plus $7,672.50. Again, feel free to just pull out your calculator for this. I'm going to do it on my end just to kind of re-emphasize that I'm not going to bother doing this in my head if I have a calculator, because we want to be accurate and we want to be efficient, okay? So feel free to use the calculator. Plus 7672.5, and that gives me, it should be 12,290, I believe. I've done this problem now a couple times, so I should have this memorized. 7672.5, 12,290. This is the answer to part A, okay? Right here. Now what we're going to do is we're going to do all of this in Excel in a moment, okay? And you're going to see that we can do this whole entire process that I just walked through in one formula. We can also, in Excel, have a nice sort of what we might call audit trail or traced sort of logic that will help us and help lay out our thought process for use, for study purposes, and I'll talk more about that in the next video about Excel. But for part A, this is explaining the math, how to get there, and we'll push this forward in Excel in just a moment. Thanks.